What's going on, everyone? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis and market insights. I'm your host, Lord MC, and I'm thrilled to have you here as we dive deep into the exciting world of finance, harmonic patterns, and what lies ahead in the week to come. But before we delve into the intricate details, let's address some crucial factors that I think are very important and are currently shaping our trading landscape. The first topic I want to bring up is the ever-looming debt ceiling, which Biden finally signed into law on Saturday, so the market's response becomes increasingly important to understand and navigate. So we're going to discuss how this variable might impact various asset classes and explore potential trading opportunities. So another intriguing aspect that's catching my attention specifically is the volatility index, better known as the VIX. So on Friday, it did test 2021 lows and closed the day at levels we haven't closed since early of 2020. So this is going to be interesting to see how we analyze the situation moving forward, if there's going to be some greed right now, and we're going to have a potential spike in the VIX. So lastly, I wanted to address the elephant in the room, and that is liquidity. So is this drying up, and if so, how could that impact the markets? There is some correlation right now with the signing of the debt ceiling that could drain some liquidity from the markets, as some analysts have been expressing concerns these past few weeks about the possibility of a resolution to the debt ceiling standoff, leading to a sudden decrease in market liquidity. So here's the current situation. Throughout 2023, the Treasury has been strategically managing the U.S. government's debt to stay below a certain amount, and that amount is around 31.4 trillion, the debt ceiling, right? So the Treasury General Account, which can be seen as the government's checking account at the Federal Reserve, has significantly reduced from approximately 580 billion earlier this year to less than 40 billion as of May 30th. So since President Joe Biden signed the debt ceiling agreement into law, the Treasury Department will have to take some steps to replenish that account. This will involve flooding the market with large number of short-term Treasury bills, which could have a huge impact on liquidity and will largely depend on the entities that purchase these bills. So these Treasury bills are debt instruments issued by the U.S. government, which can mature anywhere between 4 to 52 weeks. So it is estimated by some global strategist at Bank of America that the new bill issuance could reach around 1.4 trillion by the end of 2023, with approximately around 1 trillion entering the market just before the end of August. So that's 2 months away. So this amount could be roughly 5 times the average supply during a 3-month period before the pandemic. So some Goldman Sachs strategists have also predicted that the bill issuance could reach up to 700 billion over a span of roughly just 2 months. So just to make this simply to make all of this easy to understand, I would like you to imagine the U.S. government has some money that it needs to borrow, right? So there's a rule, though, that for them to borrow the money, they could only borrow up to a certain amount, right? Think of it as like when you have a piggy bank that can only hold a certain number of coins. So right now, the U.S. government is trying to stay below that borrowing limit, but it's been using a lot of that money. So it's like spending all those coins from your piggy bank. So once they make a deal to allow the government to borrow more money, they need to put money back into their account. So they will ask people to lend them money by buying something called these Treasury bills. So these are like IOU papers. Think of them like IOU papers that say that the government will give you back the money plus a little bit more after a certain period of time. So, but the tricky part about that is that when the government asks for a lot of money by selling these Treasury bills, it might affect how much money is available in the banks. So, when you save your coins in the bank, they keep those coins from you until you need them. So, when these people buy these Treasury bills, they might take some of their coins out of the bank and give them to the government instead. So this can cause a problem because then there might be not enough coins in the bank for everyone who wants to take them out. So some people might have to wait or not get all their coins back right away. And most of the time, the entities who buy these Treasury bills could be countries, could be hedge funds, could be banks itself. So if the bank needs to buy these Treasury bills, where is it going to get liquidity from? It has to pull it out of the market. It has to pull it out from somewhere. So it could be the banking sector, it could be the tech sector, whatever. We don't know where where they're going to take liquidity from. So that's something that needs to be brought up to our attention here, just to be just to be aware of the current situation and what can happen potentially moving on forward here as we are going higher and higher here in the market. So now I'm going to get into looking at the charts and where have we left off last week and what we can expect moving forward. But before I get into that, I want to preface by saying I am not a financial advisor. None of the things I say in my videos is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So jumping over here to the SPY here. So a SPY here on Friday went as high as 428.74. The low was 423.95 before closing the day at 427.92. So on SPY here, we have a bearish bat pattern where you did generate a new harmonic pattern here, which is a bat pattern, but it extended a little bit further, where you have now a hop at 443.52. After Friday's close, you did surpass Thursday's volume here, and you did close above 422, and you finally closed a gap at that 425. There was two gaps, I believe, around 421, and then the other gap at 425. So what can we expect moving forward harmonically here? So let me bring my drawings here. We have this 2009 trend lines from the 2009 lows that you finally broke out of here, out of this, well, it looks like it also a rising wedge here potentially, but you did break out of it, and now you did leave a gap on Thursday. So what can we expect harmonically on the SPY here? So on the daily here, you did cross the HSI midline, and you could potentially continue pushing on up, as the RSI has not been overbought yet. It's the same thing with the AMP RSI. So if there is more continuation on the SPY, you can check to see if it goes up to that hop level at 443.52. Should it not continue pushing above there, you can come back, get rejected around where you're currently at, fill this gap at 422 and change here, right above XA, and then test XA again. Maybe you retest this 2009 trend line, which is now at 420. If you fail 420, you lose that support, you can come back to BC at 416, and then after that, you can come back and test the 411. So 411 is a big level here of support here, should it SPY continue pushing to the downside. Right now, this channel that it was in created a higher high here, and it'll be interesting to see if this is going to come back to create a higher low. So we'll have to wait to see what the SPY does here, but I wanted to jump over here on the weekly. So on the weekly here, the SPY does have a bullish deep crab pattern where target 2 is calling for 433.02. So to the upside, what can we expect for SPY? You expect SPY to hit 430 and then potentially 433 here or 2 before you get rejected. The HSI and the AMP RSI, as well as the regular RSI, still have room to the upside. So you will definitely have to keep an eye out on that. I also wanted to just quickly share the monthly where we left. The monthly, this is, I guess this would be, did increase in volume over April's volume. So by definition, this candle close could be maybe a hammer candle on an uptrend, but we have to see if this is going to be an actual reversal point or not. So this is not as clear hammer candle as I wanted it to be, but we'll definitely have to keep an eye on if there's a potential reversal down here. So that is what SPY potentially see SPY here. So again, you clear back up to 430, you go to 433 to the upside, and if you that's where target 2 of the deep crab on the weekly is, and if it continues pushing up above that, you can test hop at 443. Otherwise, you come back down to fill this gap at 422, lose that, and you go down to BC at 416.12 and then 411. So you'll have to keep an eye on SPY here. Jumping over to the triple Qs. So the triple Qs here on the daily did go as high as 355.83 on Friday. The low was 352.01 on Friday, and it closed the day at 354.65. So what can we expect here for the triple Qs, which has clearly overbought now on the RSI? So there is a gap here all the way to 360, kind of close to where hop is at 361, before you can come back down and do a type 1 reaction back up to potentially target 1 at 306. Too early to tell for that, as you are left here with it looks like a indecision candle, just a doji here. We will see. Maybe that's maybe a potential indecision candle. Dojis are indecision candles. You can start reversing, but too early to tell. If we go over to the weekly looks like a potential reversal here. It looks like it wants to. Give me 1 second here. It looks like it a hammer candle. Sorry. This hammer candle could potentially signal reversal. Too early to tell. The volume still did come in slightly less than previous week, but this could signal that as a potential reversal incoming. It could potentially just go up to hop here, or to where that gap fill is at 360, and then you can come back down. There's a gap here at 333, and then you have 325, and a big level here for the triple Qs, in my opinion, is 318 On the monthly, you had a continuation. You had a hammer candle here on an uptrend, but on May's volume for the month surpassed April's volume, so this shows strength, maybe continuation, maybe there's a shot there. It can maybe test 370 if you continue pushing back to 360, which would be very, very crazy to see if this can go to 360 or 370, excuse me. Going back to the daily, so if the triple Qs into next week coming and finishes closing this gap, the next level we'll look at 361, see if the HSI prints an HSI arrow, comes back down for a type 1 reaction, back down to test 345, 337, fill the gap here at 332.22. So far as what we could tell is that the 21 EMA on the triple Qs has been shown signs of support here. Every time it comes down, you kind of close back up all the way to target, you come down to test 21 EMA and continue pushing back up where you find support from. But if it doesn't, and you lose 333 here, you come down to 326, lose 318 in my opinion is a very important level, you come back down to 306.43, and then potentially hop at 286.50. Too early to tell for that, but those are the levels we would look at for to the downside. So jumping over to the Dow Jones here. So the Dow Jones had a very, very bullish close on Friday. It went as high as 338.50, the low was 333.11 before closing the day at 338.07. So as you could tell here, the Dow Jones has a bearish bat pattern where you did come back down, tested the 200 SMA a couple times, and you found support here off of Thursday with an increase in volume on Friday. Almost double increased volume, right? You had 3 million, and this was at 5.58 million volume that came in on Friday. So what can we expect here harmonically off of this bearish bat pattern? The next level I'll be looking at is the XA here at 340.27. So if you can close above that for a couple of days and find support there, the next level we'll be looking at is 343, 345, and then 347. If we're looking at from this current downwards channel here where it created lower lows and lower highs, it is now creating that midline here, which is potentially signaling a reversal to the upside. So what would I like to see to have that confirmation? See if it's breaking the downtrend is to create higher highs and now higher lows to create another channel upwards. So the MACD is signaling that it is flipping here. I just would like to see higher highs and higher lows to see if that is a healthy potential break of the downtrend. So the HSI still has room to the upside and RSI as well. So you could test 340.27, find support, and then go to those levels to the upside. Otherwise, if you don't, you can come back down to 334, test target 1 at 330, go to the 200 SMA, which has been showing signs of support. But if you lose that, which is at 327, 328, you can come back down to target 2 at 324.86. If we go over to the weekly, so the weekly, I believe, and also the weekly, let me go to the monthly real quick. Oh yeah, the weekly, you had an engulfing candle here for the Dow Jones. So depending on who you ask, the definition of engulfing candle would be just to engulf the body, and this week you did engulf the body of the previous week. So there could be some more potential upside. There's also potential here of a inverse head and shoulders for the Dow Jones where you can climb back up, and if you can get above 345, next level I'd be looking at 357 as well. So definitely keep an eye out on the Dow Jones. Jumping over to Apple here. So Apple on the day did go as high as 181.78, almost $1 and change, close to all-time highs. So what can we expect here? Harmonically, you don't have anything as of recent for a new harmonic pattern. You do have this previous one where you have already passed 100% retracement, so you're looking at to test all-time highs at 182.94, and then after that there is I think the 127%, or maybe the 1.618 is around 198 for, I believe, new all-time highs. So let's just draw this out just to make sure. 188 with the 127% retracement of this pattern would be at 188.73. So that's a level I'd be looking at to see if there's more continuation. Obviously on Friday you did close on this candle here, potential reversal here to the downside if that is going to be a top. Too early to tell. On Monday Apple does have an event, so they'll be releasing a lot of stuff there. So see if there's going to be a buy the rumor, sell the news type of situation. Right now you're still creating higher highs, and you could come back down to create lower lows, finding support where you found support before at the 21 EMA. So if you have some if on Monday you come down with some bearish sentiment over the event, you can come back down and test the 9 EMA at 177, fill the gap there at 175, and then test 174 where you could find support. If you don't find support here and it drops below the 21 EMA, look to fill this gap here all the way to 167. In my opinion, if you lose 166.25, there is going to be more downside to come for Apple. And if we jump over to the weekly do have this harmonic bullish bat pattern where you're surpassed target 2 here at 160. So the weekly is even calling for a crazier number here off of this pattern here. It would be the 127% retracement at 198. So we'll see if Apple is going to continue to the upside here. Just wanted to quickly cover the monthly. Yeah, so the monthly you still got had more volume, or roughly about the same volume than on April. So very, very close to see if Apple here creates a new all-time high on Monday. Should be interesting to see, but you did leave on this doji candle here on the daily, so we'll see what comes with Apple. Jumping over to Microsoft here. So Microsoft, you kind of left here with the cross doji indecision candle as well. Microsoft did close as high as 337.50, the low was 332.55, and the close was 335.40 on Friday. So what can we expect here for Microsoft? The next level to be looking at here is just all-time highs at 350 for this harmonic pattern, this bearish bat pattern. You did close above hop here at 330.41, slightly average volume. We'll see if you can find support here. If you can't find support off of 330, the next level I'd be looking at is 335, and then 319, closing the gap also around 317. Lose the 21 EMA, you come back down to test XA here at 304, then 292, fill this gap down to 281, and then back down to 272. It looks like the HSI is kind of flatlining. Microsoft has been going a little crazy here where the RSI is a bit overbought. If we jump over to the weekly doesn't also look great. It looks like a dragonfly potentially here, which could also mean on an uptrend, could mean reversal. But who knows, next week could just test all-time highs as everything else. Looks like it's been wanting to test all-time highs as well. So there is a Gartley pattern here, a bearish Gartley pattern on the weekly. So if this is going to be a potential reversal candle, you can look back, like I said, to fill this gap at 316 and change, come back down to 297, fill that other gap here, and then continue to fill that type 1 reaction all the way to potential 240. But too early to tell. We'll see what Microsoft has for us in the week to come. Jumping over to, let's see here, Tesla. So Tesla on Friday did go as high as 217.25. The low was 209.75 before closing the day at 213.97. So Friday was a very bullish day for Tesla. I had a target there at 205 where I said that if it can clear above 205, there's a good possibility of going up to the 220 range here. So the next level I have here harmonic from the previous harmonic pattern is 223.79. You have volume that supports this push up here, so you are a bit overextended here on the RSI, and the HSI could potentially, have some type of a reversal candle or maybe some cooling off here where you do come back down and test potentially 207 to 208 and then 205 again, and then maybe retest the 200 EMA at 198. I do think a good level of support there. If it does lose 205, you could potentially come back down here to that 198. But if it finds support at 205 and it continues breaking back up to the upside, I would look at 223 and then 236. After that, you have another gap here, 262. So if we jump over here to the weekly has still this bullish bat pattern where you never did the type 1 reaction to target 1 here at 221.26. So there is possibility here where you did close above the 50 SMA and the 50 EMA here. So that's the next level I'd be looking at. I do think there's going to be some resistance there. But if it does clear that, you have target to all the way to 295. If you don't find support here off of or if you can't break up above 221 here, you can come back down. Like I said, 209, 205. You come back down, come back down to 177 from that big drop. If you don't hold support off the 200 EMA or SMA on the daily. So the monthly, you did get stopped at the 13 just slightly above the 13 EMA, so definitely keep an eye out on that. This was actually, I'm looking at June. You just barely started June. This is what I wanted to share. Tesla on the monthly, you had an engulfing candle. Depending on who you ask, for me personally, I like to have an engulfing candle also engulf the wicks, but by definition, you could also consider just engulfing the body of the candle, and which that's what Tesla did with increasing volume. So this is showing strength potentially for more continuation to the upside. So that's good. That's a good thing for Tesla to see if there's more continuation to the upside. So we'll have to definitely keep an eye out on Tesla. Jumping over to Google here. So Google on the day did go on Friday as high as 126.15, the low being 123.76 before closing the day at 124.67. So what can we expect here for Google? Google did hit a harmonic target there at 125. So the next level I'd be looking at, if there's more continuation to the upside here, is that gap fill around 133. There's a lot of levels here to the downside to see. There is decreasing volume the past few days, but we'll see if there's more continuation to the upside here. If I jump over quickly on the weekly you did create off of, first of all, you have a bullish crab pattern here on the weekly where you hit target 2 at 125.49 finally, and you now generated an HSI dot with what looks to me like a hanging man on the weekly. So this is a reversal candle. This could potentially come back down. If we're looking at the pattern here for this weekly bullish crab pattern, the next level you have here will be target 101.39, and then you have for that type 2 return all the way down to 65. I'm not calling for that, just saying that these are the levels harmonically speaking on the 1 week. So if the weekly is telling us that this is a potential reversal candle, we will have to definitely not ignore that and just see if there's going to be potential downside. So if I look over back to the daily, what's this downside? What are the levels to the downside? If you can't hold 124.67, the next level we're looking at is 121. The 21 EMA at 119. You fill this gap around 113, between 113 and 110, and then complete that type 1 reaction off of this alt-bat pattern all the way to target 1 at 101.30. So definitely keep an eye out on that. The HSI looks like it's trying to curl up and cross that midline, so we'll see if there's more continuation on Google. Jumping over to Meta here. So Meta looks to me very, very bullish. It went as high as 275.35 on Friday. The low was 271.12 before closing the day at 272.61. It is trying to finally finish this gap that it had when it dropped on bad earnings, and it's very close. That gap fill goes all the way up to 288 and change. So if you can break up above that and fill this gap, the next level to be looking at here is $302 on Meta. Meta is a bit overbought right now on the daily RSI. If we jump over to the weekly, there looks like it's still, the weekly volume did come down, decrease a little bit, but this looks like a V-shaped recovery here. So this kind of crazy to see Meta doing this type of reaction here, that type 1 reaction, finally back up to target 1 where you did close above 251. So that target 2 here at 302.07 is what I'll be looking at to see if maybe Meta overextended its welcome and potentially comes back down to cool off a bit, because even on the weekly you were still overbought. And yeah, so the monthly looks great. So a lot of volume. Just if you had bought Meta here back in November, long dated calls or even just comments here, you'd be sitting pretty nicely. So this is one of the craziest things I've seen, the V-shaped recovery next to NVDA. So there might be some upside for Meta. If not, you're looking at a bunch of things here. You can come back down to 260, then 255, the 21 EMA at 249 and change. Come back all the way down to 228, fill gaps all the way down to 215, another gap here. So we'll see where Meta goes in the weeks to come. Jumping over to NVIDIA here. So NVIDIA did go on as high as 405 on Friday. The low was 390.58 before closing the day at 393.27. So far, NVIDIA looks like it's been holding up. We're trying to stay, maybe trade between that $390-$400 range. So what we can expect here on, if we look at NVIDIA here, what can we expect to the upside here. I don't have anything besides harmonic level that we sorry, it wasn't even a harmonic level, it was a Fibonacci ratio level here that you took from the previous all-time highs to the previous 52-week lows, which brought up to this target here at 411.30 here. So it did test that level, but it came down below that. So to the upside, that's a level I'd be looking at, would be 411.30. But if it can't hold this level, I'd be looking at to see if it comes down to the 9 EMA at 369, 370, and then if potentially fills this gap to the downside. But you do have support here at 345 to 322. So I wanted to quickly jump over to the weekly to show NVIDIA on the weekly does show a potential spinning top here. So the spinning top is defined as two long wicks on either side, on the top and below, with just a body and medium-sized body candle here. So this is also a reversal candle potentially. So if this is a spinning top, we'll have to see if this week to come or the weeks to come is a potential reversal back to the downside here. So still intriguing to see that NVIDIA is trading at this range, but we'll see if there's more continuation to the upside on NVIDIA. Jumping over to the VIX here. So on Friday, the VIX went as high as 1565, low was 1442, and the close was 1461. So in the earlier part of the video, I mentioned that the VIX tested 2021 levels, where it did wick down to 2021 levels, but it actually here, this is 2021 levels back in June, but it actually closed at 2020 levels. So that's crazy to see that the VIX is at these levels, especially with how we are in the economy. But I know it's really hard to chart the VIX here, but the only thing I'm using here is just fib ratios, just to see if this is actually tracking. So far it has been tracking, so the next level I had to be looking at here is 1410 and then 1332. And at any given moment, VIX could also just spike up in volatility, so definitely keep an eye out on the VIX. Lastly, I just wanted to bring up the bond market here, which is, I think, should be important to look at now, especially with the debt ceiling that was signed into law here. So the 2-year has been slowly climbing up here. It's at 4.5%. The last time we were at these levels were obviously here in February, but more specifically where the bond market was inversing the indices was back here in October, where there was a 52-week lows and SPY and the triple Qs and everything else. So that's where we are again. So right now the bond market and the indices are not inversing each other. So it'll definitely be interesting to see if after the signing of the bill here, will that have correlation again, meaning that will the bond market be inversing the indices again. So I think it's important to be looking at the bond market, especially if the government's going to be selling these treasury bills. They're going to have to pull out liquidity from somewhere, whether it be from banks, whether it be from other sectors, to buy up these bills. So meaning the bond market will continue to push up if that is the case. So as we could tell here, I'm going to jump over to the 10-year real quick. So the 10-year is at 3.7. Right back in October, where the market was created 52-week lows here, the 10-year went as high as 4.3. So it is approaching that 4% again. So it'll be specifically interesting to see if the 10-year looks like a cup and handle. I know this is hard to track. There's no volume, but you did get an HSI on the daily. So it'll be interesting to see if the 10-year can go above 4% or test 4%. So that's all I wanted to cover. Definitely keep an eye out on the bar market again. I will be streaming tomorrow, same time as always, 15 minutes before the bell. So if you want to catch me on that, there's a link to the Twitch in the description box below. So I hope you guys have a good rest of your Sunday and be ready for the weeks to come. Take care, everybody, and peace.